Imagine, you wake up, check your investment portfolio, and your stocks have performed solidly as usual. But something surprising catches your eye. Your crypto investments have also skyrocketed, gaining in value at an incredible pace. Now here's the kicker. It wasn't just the stocks or the crypto alone. It was the unexpected connection between the two that caused your portfolio to explode with gains. It sounds wild, right? Stocks and crypto, two different worlds. Yet, they're more connected than you think. Today, we're going on a journey through the surprising link between these markets and how understanding this connection could reshape your financial future. Stick around until the end, because by the time we're done, you'll see how combining these two powerful forces might just be the game-changing strategy your portfolio needs. Let's start with the basics. Stocks have been the cornerstone of traditional investing for centuries. When you buy a stock, you're purchasing a small piece of a company. Your investment grows as the company expands, creates more revenue, and becomes more valuable. It's a well-oiled machine, a tried and tested method for building wealth over the long term. Investors have been doing this since the 1600s. Now fast forward to 2009, an entirely new market emerges. A mysterious figure known only as Satoshi Nakamoto introduces Bitcoin, the world's first decentralized cryptocurrency. This isn't a stock, a bond, or even a government-issued currency. It's something entirely new. Powered by blockchain technology, Bitcoin was created to be a peer-to-peer system where trust wasn't placed in banks or governments, but in code and decentralized networks. Stocks and crypto, two markets born in completely different eras with completely different purposes. Stocks represent ownership in businesses. Crypto, on the other hand, represents ownership of digital assets or networks. But here's the twist. These markets, while seemingly worlds apart, are now becoming intertwined in ways that no one could have predicted. So how did these two worlds, traditional stocks and cutting-edge crypto, become connected? It boils down to one thing: investor psychology. During the early days of crypto, it was seen as an alternative investment, a high-risk, high-reward asset that only a small group of people understood or dared to touch. Meanwhile, stocks were viewed as the safe option, a place for steady growth and stability. But something interesting started to happen as more people got involved in both markets. The line between crypto and stocks began to blur, and their price movements started to sync up in unexpected ways. Let's rewind to 2020. The world was facing an unprecedented crisis, a global pandemic that rocked the financial markets. Stocks tumbled and investors panicked. But then, something unexpected happened. Both the stock market and the cryptocurrency market began to recover rapidly. This was largely due to massive government stimulus efforts and central banks lowering interest rates, pumping liquidity into the market. But instead of people turning only to stocks, a wave of investors flocked to both stocks and crypto. Now, here's where things get really interesting. As governments around the world printed trillions of dollars in stimulus, inflation fears began to take hold. Traditionally, when inflation rises, investors flock to safe haven assets like gold. But in 2020, something new happened. Investors, particularly younger ones, turned to two alternative assets: Bitcoin and high-growth tech stocks. Why? Because both Bitcoin and tech stocks were seen as part of the future. Bitcoin as a hedge against inflation and a decentralized store of value. Tech stocks because they represented companies that would shape the future. Companies like Tesla, Amazon, and Nvidia that were building the technologies of tomorrow. Many investors saw an overlap in the potential of these two assets. Bitcoin and other cryptocurrencies represented a new frontier in decentralized finance, while tech stocks represented the future of innovation. Both were seen as ways to invest in the future, which is why investors began flocking to both at the same time. This created an unexpected connection between the two markets. But the connection between crypto and stocks didn't stop with retail investors. In the past few years, we've seen something unprecedented. Major institutions are getting involved in both markets. Companies like Tesla, Square, and MicroStrategy have added Bitcoin to their balance sheets, creating even more overlap between stocks and crypto. Think about this. If you own shares of Tesla, you're indirectly tied to Bitcoin. Tesla famously invested over $1 billion in Bitcoin, which means its stock price is now linked, at least in part, to the performance of Bitcoin. The same goes for companies like Square and MicroStrategy. These companies are blurring the lines between traditional finance and the world of decentralized digital assets. Now let's talk about the technology behind all blockchain. This is the backbone of cryptocurrencies like Bitcoin and Ethereum, but it's also being embraced by some of the biggest tech companies in the world. NVIDIA, for example, is known for making GPUs, graphics processing units, that are not only used in gaming and AI, but also for cryptocurrency mining. Blockchain technology is more than just a way to transfer digital currencies. It's being used to build decentralized applications, smart contracts, and even entire financial systems. Companies like Google, Microsoft, and Amazon are exploring how blockchain can revolutionize cloud computing, supply chains, and even healthcare. That means when you invest in tech stocks, you're not just investing in the companies of today, you're also investing in the blockchain-powered companies of tomorrow. Let's take a look at Kingsley Advani. Kingsley was just like many of us, a software engineer, working a 9-to-5 job, saving up bit by bit. But when Bitcoin first came onto the scene, he saw something that most people didn't. He believed in its potential so much that he made a bold decision. He sold everything he owned. His laptop, his furniture, even his small savings account, all gone, and every dollar went into Bitcoin. People thought he was crazy, but within months, that risk paid off. Bitcoin surged, and Kingsley? He became a millionaire almost overnight. Then there's James Say. James wasn't a millionaire, nor did he risk everything. He was a technology consultant who made a small, careful investment in Bitcoin. It wasn't life-changing, at least not at first. But as the value of Bitcoin grew, James was able to fund something that was life-changing, a dream vacation, paid for entirely with the gains from his crypto investments. It wasn't just the money that made the trip special. It was the realization that his small investment had the power to create lasting, real-world experiences. So what does this all mean for your portfolio? The connection between crypto and stocks creates a unique opportunity to diversify while tapping into both stable, long-term growth and high-risk, high-reward opportunities. Combining traditional stocks with cryptocurrencies allows you to capture the benefits of both worlds. Imagine a portfolio that looks something like this. 60% traditional stocks, companies like Apple, Tesla, and NVIDIA that are driving innovation. 30% in crypto, Bitcoin, Ethereum, and Solana for exposure to decentralized networks and emerging financial systems. And 10% in more conservative assets like bonds or cash to hedge against volatility. Of course, with great reward comes great risk. Both crypto and stocks are subject to volatility, but crypto in particular is known for its wild swings. One day Bitcoin could be up 10% and the next down 20%. But here's the thing. By blending stocks and crypto, you can balance this risk. The key is finding a balance that works for your risk tolerance. Maybe you're someone who can handle more volatility, so you allocate more to crypto. Or maybe you prefer steady growth, so you lean more heavily on stocks. Either way, understanding the connection between these two markets gives you an edge when managing your investments. Looking forward, the relationship between stocks and crypto is only going to grow stronger. As more companies adopt blockchain technology and more institutions invest in crypto, the overlap between these markets will continue to deepen. The question is, are you ready to take advantage of this opportunity? In the end, it's clear that the connection between crypto and stocks is more than just a passing trend. It's a fundamental shift in how we think about investing. So, if you're looking to supercharge your portfolio, consider how these two markets might work together in ways you never expected. Thanks for watching, and don't forget to subscribe and hit the notification bell so you don't miss out on future insights that could help you take your investments to the next level.